Infinite banking is like a method that a lot of people will funnel their money through a whole life insurance first, put money in that, and then build up a cash value and take a loan from yourself and then put it into a real estate deal or an investment or put it into the stock market. So it's an intermediary step. And people are like, why are you doing this shenanigans, right? Why do this? If you think of this whole life policy as an asset, it's a life insurance contract. It's not a hard asset, but it's with these AAA rated companies, probably a lot safer than putting your money in your local bank in reality. So these life insurance contracts, they're pretty solid. The way to think about it is if you have a house, you pay down your mortgage, you start to build up equity there. There's value there. Just like in a life insurance contract, there's the cash value portion. The HELOC, there's the equity. And how do you get the equity out of that? You take the HELOC and you take it out and you go invest in other things. So this is no different than a HELOC on your house or rental property. And we're using it in the same manner. Basically, is you take your liquidity, you put it into this virtual house or this life insurance contract. You take loans from that. While you're doing that, just like that house who appreciates in value, even if you drained out the equity via HELOC, it continues to go up in value. Of course, real estate, sometimes it doesn't, right? It's a more variable, but this is where what's nice about putting it in a stable life insurance contract. It's more stable, just keeps going up. So this is where the idea, if you're making money in a couple places, another benefit is it's off the table of litigators. So if people recall how O.J. Simpson did all that stuff, I guess we could talk about him because we're all over that currently. But the guy had all his money in his 401k and it's pretty protected against litigators. And your life insurance contract, especially if you live in certain states, is very similar concept. So the idea is you have a lot of your net worth hidden here and it's protected, but also you're getting a tax-free, usually about 4 or 5% when the money is in there. And sure, you have to take a loan from yourself, but that should be taken as a business expense, right? In pursuit of other investments. You got to talk to your own CPA, or if people want a referral, they can reach out. What I started to learn from a lot of these high net worth investors, people get confused with this type of stuff, right? James Ramsey say whole life insurance is a total scam. The devil's in the details, right? It's all how the stuff is configured. If you're configuring it how most people will do infinite banking or whole life policies, the majority of it is the insurance portion. And that's where the commissions and the fees come out of. The way that people in our world will structure it is either with a mere 30% or make it bare bones 10% insurance so that you minimize those fees and commissions as much as possible. And then the other 90% or 70% can be those paid up additions, the overfunding thing that you're referring to. That's infinite banking in a nutshell. I've got this diagram. I think it's at thewealthelevator.com/bank. People want to check out. Going through this whole transition myself, it was really hard to do it without meeting other purely passive accredited investors out there. So that's why we've created the network, which you guys can join.